So the thing I got to say about what Kelvin said is was best, like controlling controlling your money and controlling your dollars in your community, and it led to a lot of things. Was waking a lot of people woke up, a lot of people started looking to Dr. Claude Anderson. A lot of Black people started following real estate stuff and how to build their credit. And one of the biggest things that started jumping off recently was a lot of people of color started getting more involved in the stock market. So what I first guessed of tonight, he's a good brother. He's this brother I love. I really do call him. He's like a blood brother to me. This is my man Dwayne. He is the senior financial advisor and first vice Fargo Banks. This one his own money. When I say he got his own money, he got his own money.
He got his own money.
He's a financial advisor for both high and net worth individuals, institutes, clients, and managers, and all this other shit that we ain't gonna tell you about. But he's not. But he's a dope dude. He's the Jackie Robinson of UBS Bank. He's the first Black dude there. so, like I said, Sammy Jammy, bring up my man. He got his own money, Dwayne Taylor.
There you go.
He got his own money.
I had to clean up for you guys. Listen, I thought I look smarter and sound smarter. Gibberish that's coming out. So,
you gave me a long ass speech. Right? Like, man, fuck all that shit, man. This motherfucker's smart.
My hearing was coming in and out, so it's fading in and out. I think I got it good with you guys.
You got it straight now?
Yeah,
good.
Yeah.
Yo, Dwayne, I got a question.
Yes, sir.
Loan me $40.
That's not a question. That's a demand. That's a demand.
I know you got it. I know you got it.
Listen, man,
this man pays me to be his friend.
He paid good. He paid good.
Because
go ahead.
D told me you guys were instituting a new rule this week where the guests had to pay. So I mean, I paid him. He said he's gonna split it with you guys.
You holding on to the money?
You holding
it. So you can. So Roddy, you can get your 40 from him.
I'm gonna see him about it.
Now, Dwayne, with all the things like you've been doing this for a very long time, like involved in the stock market, investing in people like that. So, like, a lot of people's first time to get into this to the stock market. What's your first bit of advice for a person first time really dabbing into the stock market?
Don't put in what you can't lose, right? Don't put in what you can't afford to lose. And it sounds like a simple concept, right? But the reality is a lot of people think it's a get rich quick scheme, right? Mm-hmm. So they sometimes associate it with, the people that they see on TV, or they watch CNBC and they see these hot stories, or social media, as is a son of a gun, where people see stuff and they think Bitcoin, rags to riches. All I got to do is put $5 into this and it turns into some astronomical amount where it's almost like playing Powerball. So investing should be something that has a little bit of pain to it, right? In terms of that. What's the old saying? If it's easy, everybody would do it, right? So investing needs to have a little bite to it where you feel like, there's some stress in the sense of, you got to do your homework. You got to put some money on the side where you feel like it's almost like paying a bill, right? I always tell people when you're first starting out, you pay your Con Ed, you pay your cell bill, cable, all that stuff. Pay yourself in an investment account, right? You can build up a certain amount of money. And when you feel comfortable putting that money into play, you can do that, right? So a lot of people, I think, put the cart before the horse, right? And I know do you want to touch on GameStop and all this other stuff, but a lot of people tend to build the roof first and then try to build the floors down from there and then get to the foundation, right? So most people, when you're starting out, just like a carpenter, right? Building a house, you're going to build a solid foundation first, right? And those are your stocks that you feel comfortable with and that will be in business for a long period of time. May not make you a ton of money initially, but it's a solid base. Correct. And then as you get more and more comfortable, you add the floors on, right? And at some point when you feel like your house is very strong, then you can do like the extra stuff, the chandeliers and the sconces and all that kind of stuff where you feel like if this takes a hit, I already have stability on the floors below, where this is not going to crush me, where I can't do this anymore, or I'm going to have to sell some other asset to make up for the loss. If that makes sense.
Dwayne, let me ask you this question. When I was a kid, my father bought stock for my sister and I in AT&T, and he just wanted us to get an idea of what it was, and I was very excited about it. And we wound up selling it. My sister and I would look in the paper every day. Back then, you look in the paper to find out, and we didn't have patience with it. But what age would you say parents should expose their children to the stock market or investments in general?
Good question. So, it's interesting you mentioned AT&T. So my dad, God rest his soul, passed away back in '91, but he was the first person I knew that bought a stock. My father had a third grade education, worked for the Transit Authority, and the first trade he did, he bought 138. I remember like yesterday. He bought 138 shares of AT&T, right? And I remember coming home from school. I was 14 at the time. I remember coming home from school, and we would sit on the couch and watch. PBS used to have a ticker. Like at the end of the day, like the Lehrer report, it would come out of TBS. PBS would have a ticker at the bottom and go, "Oh, there's AT&T passing at the bottom." You see the symbol T, and you get all excited. So there's no set age. I think as a parent, right, you have to set that table for your child to almost, we get them piggy banks, right? We give them allowances, and we do things that kind of establish a certain level of, we want you to be better than us, right? I didn't start investing until I was in college, right? When I started on Wall Street.
Right.
My kids are going to, knock on wood, will start off earlier. So I think the earlier they start, the better. And listen, you can start them with the concept of investing in housework, the concept of investing in their schoolwork. They do well in school. That's an investment in themselves. You give them an extra $1. Right, you show right. It doesn't necessarily have to be they put $20 into a Robinhood account and do X, Y, and Z, but you show them how they can build equity in themselves, and that's a good, I think, springboard into an investment account down the road, right? Because it's Excellent. Something where I think it's just we get so many as our people, we get such a late start in so many areas. I'm first generation suit and tie, right? So. And because of that, I felt like I was behind the 8 ball in terms of knowing when I should turn on the spigot for investing, when I should do this for, savings. And I had to almost teach myself, but, I ramped up and I think it's important for us to, ramp our children up and people that we mentor and things like that.
I heard you say something, Dwayne, where you said that when you were younger, you started on Wall Street, when you were still in college, and I respect that so much. In the former life, I was studying to be a stockbroker, in college as well. I didn't have the patience you have and the fortitude that you have. I didn't have the concentration, so I had to let it go. You know what I mean? But I did learn a thing or two. You know what I mean? In that time, and I did learn that we don't really. We tend to just put our money in the savings, and us being us, and we just put our money in the savings, and that's it. We let it go. You know what I mean? And we don't really involve ourselves in investment. But when my oldest son, before he went off, I did start him on an E-Trade account. You know what I mean? And get him started for that. Do you have any ideas on how to start your kids off with those kind of investing? Is there anything that you prefer, the E-Trade, Ameritrade, whatever like that?
So I work at Wells Fargo in the private bank, and so we have like 3 different divisions of investing, right? So we have the high net worth area, which is where I'm in, but then we also have a unit called Wells Trade, right? So Wells Trade is no commission, right? And it's pretty much the whole world now with that DIY situation, to do it yourself, where people want to kind of implement their own ideas. The whole world is 0 commission, right? So Charles Schwab, E-Trade, Fidelity, Robinhood, obviously. So the concept of setting your child up for an account and guiding them, I think it has more to do with you have to implement their ideas, right? And so I think sometimes now my kids are 4 and 5 years old, so I haven't given them their opinion yet. So they don't know their opinion because I haven't told it to them.
Oh, God.
So as they get older, and in your case with yours, I think you have to say, hey, listen, here's a basket of 10 stocks or 10 companies that we have visited over the last, 6 months, right? We went to, Dick's Sporting Goods, we went here, we went there, we went to Macy's, we went. Out of these 10, what are your top 3 or 4 stores that you went to, right? And let them say, Daddy, this is what I like. I really like how, when we go into, Dick's, everything's laid out, or how, they have everything I can buy in one spot. And I think you allow them to engage themselves, make their own decisions in that. Now, certainly, there's certain companies, that probably won't last another year or so, and your kids may not know that. So you may have to kind of nudge them a little bit and just, give them some advice. But I think if you engage them in the aspect of saying, tell me what you think about something that you've taken part in, right? Most kids are not going to know about the full concept of Amazon other than there's a box on our front door every day. Or, a lot of people don't really fully understand Prime, like, in terms of how,
right.
For better or worse, they're putting a lot of companies out of business. But I think it's up to us to kind of teach our children the idea that it's okay to have an original idea where I didn't force it on you or tell you, no, you should be buying Tesla, you should be buying, Apple, you need to get the best ones. And we tell them. I think that kind of takes away, number one, it should be fun, right? Especially at an early age.
Right.
Because when they see that growth of money potentially, knock on wood again, that's going to inspire them to say, listen, Daddy, don't give me my allowance, put it into my account, right?
Yeah.
And Derek, you made the point about saving and investing. A lot of people don't realize there's a difference. I mean, there's a major difference. Squirreling away your money in a savings account is squirreling your money away. It's
right.
basically you're putting it in the mattress, right?
Yeah.
You want to keep it liquid. There's, assuming you have less than 250,000, under the FDIC levels, you're protected, right? Investing is something that's saying, listen, I want growth, right? Investing and growth are synonymous, right? Losses also, are part of that equation too. But I think for us, more times than not, we choose security over stepping out on faith, in terms of it's kind of saying these other people are doing it. Like they don't seem to be having a problem with it. That's why I tell you don't put out there what you can't afford to lose, right? Once you feel like you have that basket where, of course you want to lose it, but once you have that basket where you can feel like you can do whatever with it, it's liberating because now you can just make decisions based upon should I own this or not, as opposed to lights to get turned off next week. I got to sell this stock to pay off this and then rearrange that. Why am I even invested? I should just keep it in savings, because I'm going to grab it anyway at some point. So why even mess around?
That's a generational thing, I think. I mean, my great grandmother saw the collapse and she saw the stock market fail before, and she saw banks fail before. So they had this idea that they just saved, especially of that time. You just saved. You save. I mean, my grandmother. You put your money in a saving account and you don't touch it. You just don't touch it. That was, and then they didn't realize how the banks were getting rich off their money and things like that. And now I think because we have more information, people have to understand that facts are your friends. You need to understand that the more you know, the better you should do. And I think that's why the dynamic has changed. This generation, although they consider it the first post-literary society, there's more information at your fingertips than any other generation previous.
It's scary.
Yeah. Hey, Wayne, when I talk to people, one of the main things I always hear from people about the stock market is they feel like they have to basically watch it every day. They got to move their stocks around every day. That, and you said earlier, basically invest in companies that's going to be around a while and just sit in it long term, correct?
Yeah, I mean, listen, like anything, there needs to be a level of babying to it, right? I mean, because, I do believe, like there's certain recipes that you set it and forget it. You put it in rotisserie and just let it do its thing, and then it'll cook on its own, and boom, it's done. Investing requires a level of acknowledgement that I'm buying something for a particular reason, right? So I'm going to tell you, I started a business in 1991. My mentor obviously he was advising me all the time, but he gave me the advice. He said, listen, Dwayne, never buy something. It's like, you go to the club and the club is looking a little leery. You need to know what the exit sign is, right? Never buy a stock that you don't know what you're looking for to get out of, right? Mm-hmm. So everything that I buy for clients, I already know what I'm looking for to achieve to get out of it. Now, whether that's for it to go 20% or 30%, or, I'll use Apple as just an example. 5 years from now, iPhone 95 is coming out, right? And I'm preparing for, I'm buying it and, buying the stock and preparing for that moment when it comes in the announcement. They typically make the announcements in September, and I'm waiting, and they make the announcement that iPhone 95 is coming out. Boom. I hit my target, stock responds accordingly, or whatever the case is. In that moment or leading up to that moment, I got to make a decision. What's the catalyst that's going to keep me owning this stock beyond this point, right? So now I have to establish another situation that, basically makes me still bullish on the company, right? So whether that's, a new CEO coming in, Tim Cook is retired and they got a new person coming aboard, they got this electric vehicle they're talking about doing with Hyundai now. All those things you have to process. So when you talk about setting it and not doing anything with it and just kind of, yes, that's your foundation, right? So let's say you buy your Johnson & Johnsons and your, and your Mercks and those kind of Walgreens and those companies that have stability and have been around for decades through whatever pandemic or crisis. Now you can start those other ones that you add on the first floor and second floor. Those maybe you pay a little bit more attention to because they're not as established as, what we call blue chip stocks, right? Mm-hmm. So you should watch them. You shouldn't, it's like watching paint dry. You paint, if you watch it, it'll never dry, theoretically. You should watch your portfolio because it's the prudent thing to do, but you shouldn't overcook it, right? You shouldn't just make changes because it went down 5% today, right? To me, when things go down, that's like, it's going on sale, right? If everything else,
buy some more sometimes,
like tuna fish, 10 cans for $1 versus $1 can. So I would just say, listen, if you're a new investor or even an experienced investor, and an experienced investor would probably know this, is that things evolve, right? Mm-hmm. The economy from 15 years ago is not the economy now, right? Everything has an IT touch to it, right? You look at Tesla. Tesla has an $850 billion valuation. That's insane. And they just became profitable last year. Ford.
Wait a minute.
Yes.
They just became profitable last year.
Yeah.
Wow.
I think Tesla is like an $850 a share stock right now.
Yeah, and that too. Yes, exactly. So,
I remember when Tesla was $70 a stock.
Man.
Listen, I had Tesla for client. Well, I have Tesla that I own for clients, but they really own it theoretically from 2014 because Elon Musk owned a company called Solar City. Mm-hmm. Solar City, and he had Solar City and Tesla at the same time. Solar City was acquired by Tesla. So if you had Solar City stock, you end up getting Tesla stock at like $30 a share.
Yeah, that's amazing.
Yeah, like 6 years ago.
Go ahead, Dwayne. No,
I was just saying
Dwayne, all right, go ahead, finish your statement.
No, I was going to say this last thing is that this is a new world economy, right? And it's evolving. And if you don't evolve your portfolio along with it, General Electric is on the precipice of going out of business, right? Companies like, you look at Polaroid and all these, Eastman Kodak and all these companies that, oh my God, they'll never go out of business. Ford and GM combined have about a $90 billion valuation versus Tesla, 9 times more of Ford and GM combined.
Mm-hmm.
Wow.
Combined. It's remember, the market is a forward-thinking apparatus, right? So it's valuing Tesla at some level in the future. Now, next week it'll value at some other level, in the future. So, but yeah, Rodney, no, you manage your account accordingly, but don't overdo it just because you got spooked one day.
Yeah.
So listen, Dwayne, since I don't have no real money, I asked him to give me a stock tip. I asked for Tesla, he gave me testicles. And I was looking at
and only gave you one.
Come on, fucking penny stock for real. Tesla. He said, you can afford Tesla. I'm gonna give you a testicle. You know, look at the motherfucker drinking Fiji water. I got Poland Spring. That's some bullshit right there. That's some bullshit.
I'm up here drinking toilet water. It's hard to
This motherfucker heard the overcoming speech, and I must have fucking fell asleep during that part of it. This shit ain't working out. This shit is not working out for me right now. So, Dwayne, you mentioned like Robin and all these people now started investing themselves in people like, you know, from the barbershop talks and everything. Can you explain to people what's the good things about Robinhood, and how does Robinhood really work for people?
So as I was saying before, with our platform, so Wells Trade is our platform. You know, Kelvin, you mentioned E-Trade, and you know, all these, there's so many different platforms. Conceptually, they're the same. Robinhood was catchy and flashy because it's Robinhood, right? You know, it's for the average person and for the average Joe, and you know, we're going to stick it to the man. And,
rob from the rich, give to the poor.
Right, exactly. And the bottom line is that Robinhood is the reason why Robinhood is grown exponentially is because that concept of taking $5 or $10 and buying one share of something fits well within their, you know, business model, right? That's what they sell on. Listen, you don't need to start an account with $50,000 or $10,000 or whatever the case is. Come in and buy this fractional share of, you know, Google for $300 or whatever the case is. So it gave power to the people in terms of making them feel like, you know, we finally have a brokerage firm or platform that's for us, right? Meanwhile, Robinhood is financed by private equity and hedge funds, right? So
it's called Melvin Capital, right?
Well, Melvin Capital, which was never heard of prior to 3 weeks ago, it got involved. You want me to jump into this whole? I mean, I can jump into the whole GameStop and how.
I think you should. I think you should.
And
if you can, please.
A lot of people don't understand it, and the thing is, now I know people that now are terrified to be in the stock market just because of Robinhood. You know what I'm saying? So yeah, just definitely explain it.
Yeah.
And please, anybody got any questions in the chat? Please give it to us now. This guy's very knowledgeable.
Throw them in. So in order to understand that, you have to understand the participants, right, of the whole pie, right? Mm-hmm. So you got hedge funds, you got Robinhood or brokerage firms, you got the retail investor, right? And then you have what's called, let's call it, you know, third parties that kind of get involved that you know, we'll find out about later. So hedge funds are for the wealthy, for institutions. Hedge funds are, you know, typically massive in size, and the reason why hedge funds typically perform well is because of leverage, right? So hedge funds come to companies like mine, and they give us $1, and we give them $60 worth of purchasing power, right? So a hedge fund that's 10 billion in size, you know, could be operating like it's, you know, $400 billion entity. Mm-hmm. So instead of them being able to afford 10 shares of Tesla, now they go out and buy 50 shares of Tesla, right? So when Tesla goes up 50%, well, you know, you multiply that out on the additional shares that they were able to buy, right? So Robinhood and Wall Street and all these other areas, an individual doesn't get that multiplier. They get one, right? So if you give them $1,000, it's called margin, right? I'm sure you guys have heard of margin. Mm-hmm. So you can buy $2,000 worth of stock. Mm-hmm. So your multiplier is basically, you know, you can double, right? But also, if you lose money, you got to pay back the margin money that you borrowed. Plus, you're going to take a loss on whatever, you know, that stock that was at 1,000 now it's 500. Well, you lost 500. Plus, you got to pay back the 1,000 to, you know, to Robinhood. So the issue became where, and I'll talk specifically about GameStop. There's a thing called shorting stock, right? So everybody knows when you, I don't know how it looks on your screen, but you know, you want to go left to right on an incline. Mm-hmm. You know, you want to buy low, sell high, right? Yeah. Well, when you short stock, you want to sell high and buy low. So it's almost like eating your dessert first and then having your entree and then your salad. You're going to do it in reverse, right? So if you feel something is losing value or has a, you know, is going to go out of business or just the business model is just terrible, you're going to sell stock short. And the way you sell stock short without, you know, I'll try to simplify it as best as possible. You come to me, I have a client comes to me, Dwayne, I think GameStop is going to go down. Can I borrow 1,000 shares? we have what's called the stock loan desk. I call up the stock loan desk. Hey, so-and-so wants to borrow 1,000 shares. Okay, they give me 1,000 shares. They charge them interest because it's a loan, even though it's stock. They take the market value of the loan and its interest. And the hotter the stock, and this is where kind of the stuff kind of came in, the hotter the stock, the more interest it is, right? Supply and demand. So you take the short, the client shorts the stock, they sell it, right? So now they have a negative 1,000 shares. Got it? They have a negative 1,000 shares. GameStop went down to whatever, $10 a share. Rodney, Melvin Capital was short GameStop, was making a killing in it. Then you have Reddit. Okay, so Reddit, this is kind of like, West Side Story, so you got this other side over here of the average Joes who are really smart. A lot of them are smart, but a lot of them are followers too, right? I mean, it was like 2.7 million people in this one chat room. I mean, it was just insane. Yeah. They're saying, listen, we're going to squeeze GameStop, right? If we pull all our money together, obviously you all have individual accounts, but at the count of three, I'm exaggerating. At the count of three, we're going to go in this market and we're going to buy up GameStop.
Yep.
GameStop started getting pushed up by these Wall Street bets and started ticking up. Now remember, Melvin is leverage, right? Remember that leverage I was telling you about?
Mm-hmm.
So where they could have afforded $1 billion, I'm exaggerating, $1 billion worth of GameStop, but they bought they shorted $10 billion worth of GameStop. So as the stock starts going back up, it reverses price on them, right? Remember, you want to sell it here and buy it back down here. The stock started going against them, right? When just like anything else, if you have a house and and your equity is too low, you're underwater. Remember back in the days in the bubble, we were underwater, and you can get underwater on a stock position. Yeah. Melvin got underwater because they pushed this stock from $10 up to 200 to 300, and topped out just about 500. So Melvin, when it was around 200, went to two firms and said, "Listen, we need a bailout," right? Because they had to buy back the GameStop stock that they were short, right? Plus, now they're down 50%. They lose 50% of their assets in that one stock. Wow. The power of leverage, right? It goes both ways, right? It's the gift and the curse. A company called Citadel and another company called Point72, who's Steve Cohen, who's the new owner of the New York Mets. Mm-hmm. That's his company. They pumped about $3 billion into Melvin Capital to keep them afloat. Right. Wow. So in the meantime, people at Robinhood, when the stock started getting crazy, they're trading this stuff. This is all retail now, right? So this is all now it's like a pyramid scheme. I mean, you got to think of it like that, right? Because when you need this thing to keep getting pushed up higher and higher and higher with new money coming in to keep pushing it up, right? That's how buyers push the market up. But when the buyers started drying up, the stock started coming back down. There's no helium in the balloon anymore, right? So it started coming back down. And what you found was Robinhood, every day brokerage firms have to settle up trades, right? And people were over trading their accounts with no equity. You can only really kind of turn, I'm simplifying this, but you can really only turn your account around one time per day. What I mean by, so let's say you have $10,000, you can buy something worth $10,000, sell it. Let's say you sold it for $12,000 that same day. Now you have $12,000, but you can only do that one time. You got to wait for overnight to do it again, right? But people were flipping this stuff back and forth under this. They were recycling $1. Robinhood had to pay for every single trade they did, not just that one spin. They had to pay for all the spins. So they have to keep that capital available. So they would reach out to a company called Citadel to get a loan, and they did. And that's why they clamped down, to anybody who thinks Robinhood, oh man, they screwed us, it's for the little people. Robinhood did what they did to stay in business. But economics 101, right? There's no such thing as a free lunch, right? So if you're getting free commissions, you're giving up some optionality somewhere else, right? And that's them telling you, listen, you can only buy one share today. They're putting their thumb down on you, and to them, they was like, oh man, you guys are supposed to be for us, and you're screwing us. If you have a full service relationship like with me, there were no restrictions, right? And the only restrictions we had, so we would get emails during the day saying you can't solicit, right? So I can't call clients up and say, listen, let's get in this GameStop and do X, Y, and Z. At most, I can take their orders on an unsolicited basis, but I couldn't do it on a solicited basis. So I think the main thing with Robinhood is the concept that the investors, their account holders were disappointed that they ended up, kind of reverting back to the rich guy, helping out the rich guy. And to me, listen, this is all capitalism at the end, right? Because as much as people want to stick it to the man, the problem is that hedge funds manage union money, they manage pensions, they manage retirement accounts, 401ks. So it's not your rich neighbor that has money with a hedge fund. So in an effort to stick it to the man and crushing Melvin, well, some of these retirement accounts are down 40, 50%. Now, I don't think you can pull anybody on the side and say, listen, I'm prepared to lose $1 million just to stick it to the man. Listen, if you got a Robinhood account, you're a capitalist. I mean, I don't think you're throwing your money away just to say, listen, I'm gonna show the man, that I'm willing to lose all my money just to stick it to him. So
shit, I wish I had that kind of money to throw it out there and burn it. Right? The way I used to burn my money is to throw it up in the strip club. So that was and our trips to Vegas, but we ain't gonna talk about our trips to Vegas back in. We ain't talking about
a long time ago.
Long time ago.
I used to wash my money in the strip club. That's what I used to do. That's a good place to wash it.
Oh, man.
I'm sure it smells a little funky to begin with. So yeah.
Yo, Dwayne, man, listen, man, we want to thank you, man, for coming on.
No, I'm not done. Let's keep going. No, I'm not finished, right?
Hey, listen, man, you can pay for our show. We'll do whatever you want to say, boss.
I just gave you money to come on the show, man. Pay these guys your share. Right.
Yo, Dwayne, seriously, man, I love you, brother, man. I love when you educate. Dwayne also, before comes about my job, sometimes talk to the young people and whatnot like that. So it's not just like my money, just sometimes the brothers talk about life. So, I truly appreciate you, brother, mentoring and doing what you do, man. And next time, give me a better stop take.
Yeah, no doubt, man. I appreciate you guys, man. Listen, great way you're paying it forward, and I'm sure you guys are going to grow into something really impressive. And
thank you so much.
I'm glad I got on board early, man. Hope to be back later.
All right, brother.
Dwayne. Tell your brother I said hi too, man.
His brother's about to retire. Yeah.
I used to work with your brother.
Are you serious?
Yeah. Ask him. Yeah.
Oh my! So you retired now?
Yeah, I've been retired like going on 7 years.
Yeah, he's done in July, man. I'll definitely tell him that.
Yeah, just tell him Mitch said what's up. You know what it is.
Man, small world, man.
Yeah.
Glad you got out, man. Stay safe out there.
All right, you too, man. Take care.
All right.